Hi, my name is George Dagnino. I'm the editor of the Peter Dac Portfolio. The reason for this investment strategy is because the market, our indicators are showing the market is really close to a period of consolidation, to say the best. So what I developed is a shorter term trading, and is giving great results for our subscribers and members. And some of them asked me to prepare a video going into more detail on how I do it, and I'll be glad to do it. So let me start first on the one concept that I'm using that is very important, is the concept of relative strength. Relative strength is computed with the price of the stock divided by the S&P 500. So if this ratio goes up, means the stock is rising faster than the market. I'm assuming that the price of the stock is going up. So if the ratio goes up, means that the price of the stock is stronger than the market, appreciates faster than the market. That's the kind of stocks that I suggest to select. Also, as you probably read my publication, you'll see that all the stocks that I select are big names. I don't have to go fancy volatile names. You can still make money with solid companies just because they have some short-term maybe correction, and they start picking up again the rally. The other thing that I want to mention is which is also important, is the relative strength has a momentum of its own. In other words, if you buy a stock of a good company, that price is going to keep rising faster than the market for quite a bit of time. So this is what I call momentum. Why? Well, let me explain why then. I was a long time ago associated with a large corporation, and this company was giving to analysts from, let's say, Fidelity, Vanguard, big companies investing millions of dollars, private shows on where the company is going, what pricing strategies, product strategy, expansions, diversification, the whole vision of the corporations. These are shows that are prepared for very selective groups with a lot of money to invest in the company stock. So once these people decide to buy a company, and they start accumulating the price, and the price start rising faster, that's why the momentum keeps on going. So what the approach that I'm following by using relative strength is take advantage of what they know, things that you and I will never know, because they have these private sessions that I talk to people where part of the session you will never guess unless you are invited and you have a lot of money. So this is the importance of relative strength. We select stocks of solid companies with rising relative strength. And the idea is that when the relative strength turns around, the odds are that will continue to go up. Of course, we buy only stocks of companies where the price is going up. So what I'm going to do now is give you what are the criteria to buy these stocks. Okay, in the previous slide, I told you why relative strength momentum works, because people that decide to accumulate the stocks will continue to accumulate. And then, by the way, when they start to selling, they will sell way ahead of what the public knowledge is about the company, because they know very very detailed information about the company. So following relative strength is important. Now, what kind of stocks I'm buying? And by the way, I will show you some examples later in the following slides. First of all, they have to have a rising price. Then also they have to have a rising relative strength. Then have to move above a previous high. It helps if this happens. And then on heavy volume. When your volume is very, very important. If you see a stock price that declines and suddenly you see a lot of volume, that means that there is accumulation. Then the stocks keeps on going up, and then you see a lot of volume again. That means that they're selling. And chances are the relative strength start coming down. So volume, trading volume is very important. So after you make a nice gain on your stock, and then you see the volume going up quite, and you see the spike. I will show you some examples. Really out of range spikes. You know, there's people who know they decided to get the gains, and that's what the time that you also have to take your gains. When do you sell the stocks? Well, when the relative strength starts rolling over, and again, because people who know, they started selling, so you're going to sell it with you. And usually when they do, it will take quite a bit of time for the stocks to restart going up again. So I would mention, I got something else to say, but okay, when the relative strength declines, you have to sell. Then also the price will start coming down, and then you see heavy volume. Now, why I stopped before when I was talking when declining relative strength declines? Because this is a system where you don't have to think the future and you don't have to think the past. You don't have to think anything about politics, the Fed, whoever you hear on TV. This is a strictly price, relative strength momentum, buying, forget about everything, sell when the criteria are met. So sometimes I explain this system to some friends and say, yeah, but what about the Fed? Forget about the Fed, just sell it. But it's a good company, sell it. Then if the conditions happen again, it could be in 2 or 3 days, it could be 2 or 3 months, you're buying it again. There is, it's not going to run away. If you buy an Apple and tells you to sell, I'm pretty sure sometimes the next 2 or 3 months will give you another opportunity to buy. But again, this is a system where you buy and sell and you concentrate on the trade and making money. So now I'm going to make a few examples to give you an idea what I mean. At Peter Dagg's Business Cycle Academy, we not only show stocks, and every time we have a transaction on stocks, you will be emailed so that you know what we're buying and what you're selling. We have 3 levels of memberships. One in membership number 1, where you will have only the videos that like this one. Membership number 2, you will have videos and economic and financial updates. So if there is an economic information being released by any agencies, we'll send a comment to our membership to say how we interpret the data, like this say durable goods orders, for instance, today we're very poor, declining, so this means the economy is slowing down, or otherwise housing prices are coming down. So this is the kind of economic and financial updates you will receive together with the videos. Membership number 3, you will get the Peter Dagg portfolio, which is our work is 22 pages twice a month, plus the videos and plus the economic updates and everything else. So I hope you really enjoyed what I showed you, and I hope you become a member of our service. Thank you very much, and I really hope to see you very, very soon. So long.